We are recording.
This is Market Week Live for August 2nd, 2024. Information and support for traders and investors. Welcome to all of our members that are in the room, and we are live streaming on YouTube. So this is great that we have so many people out there. Remember, if you're on YouTube, please do make sure that you subscribe to our channel, and you'll get notified when we do these shows and other things that we put up on YouTube, which is quite a lot. All right, let's get rolling in here. We have so much to talk about, but first, of course, there's the legal that says everything that we do is for entertainment and educational purposes only. It's not investment advice, whether we do it oral, written, or in the videos, or any way we present it to you. It's really for you to be used with your investment advisors for your investment decisions, and does not function as a substitute for advice from that investment advisor. And we always want you to consult your own trading plan. It's so important to do that. And if you are an investor and everything is about some longer term things, we know that you want to consult your investment advisors for that. So you can get all of our legal stuff by going to www.askSlim.com. You have all of us today. This is one of the finest analytical teams you will ever find out there. Me, I'm at it, 50 years now, and you can see that by going to our new front page. Talks about my 50-year anniversary right on the front. Matt Serpy's been with me a couple of decades, Arvi about a decade and a half, and Katie Anagostos has been with us for the last couple of years, a great expert in cycle analysis and also in option trading. And she brings you some of the great option trade ideas that we put out there. You can learn more about us by going to askSlim.com, meet the team, and you'll see the interviews that we put out there. And there's lots of great history and information about us. If you want to contact us about membership issues, website issues, then write to team@askSlim.com. If you want to know about our information, education, analysis, first-time specials that we may have or upgrading as members, then write to Matt@askSlim.com. And today, coming up in here, I'm going to bring in my opening comments on the markets. You have all of our hosts each bringing a trade planning idea, and we're going to share with you how we come to that idea by showing our total approach to trade planning through our very unique style of analysis. Matt is going to review some of our great services, and you're going to see how you can get a test drive on two of our really newer and fantastic services that we offer. So you'll be able to get that for absolutely for free. And then we'll do our express round. I see questions already being put into our Q&A. That's for level 1 to 4 members. If you are watching us on the streaming and you're not a member, well, become a level 1 to 4 member. You'll be sent the link to participate, and then you can put questions up there. I'm going to bring you my market analysis. I'm going to look at SPY, multiple time frame cycle analysis, and some important comparisons looking at the US dollar JPY. And when you see this, you might fall right out of your chair. Anyway, it's information that you're going to be able to use going forward as you trade what has now become a wild market. To watch the show, again, premium members, you're sent a link and you can participate in the Q&A. Free and non-members, you watch it on YouTube, but we encourage you to become a free member. If you're watching right now a clip of this show and didn't watch it live, make sure you go to askSlim team channel, and you'll be able to then subscribe to that. If you're new, I really want to encourage you, go to the askSlim.com website, look around, and make sure that you sign up for free to our test drives of the day trader and MCM. And Matt's going to show you that in just a few minutes. On YouTube, subscribe to the channel and click the notification bell. Make sure you like this video, give it a thumbs up, and make sure on X you follow us at askSlim. If you have any questions on anything that we show you in here, write to Matt@askSlim.com. All right, this is my opening comment on the market for August 2nd, 2024. Well, we all know stocks fell this week and at times sharply as earnings reports overall were disappointing. That's especially so in the AI and tech stocks and mega caps that were so inflated on the upside on some hopes that the AI craze would bring earnings that were astronomical, and the stocks and the stock market would grow into those prices that they had. Well, that's very, very often a mistake to do, and we see it as many of these stocks have melted down. And while small caps were the go-to sector, well, they also got sold really hard as investors dumped, well, everything, almost everything, but money did move into bonds in a very sharp way. And if you have followed our analysis or been a member, you know that I said that interest rates would not fall in any significant way until the stock market fell. And that's what you see going on right now. And I've showed several charts historically that support that. And the biggest declines in interest rates come during stock market bear markets. Now, the gold market, I'll show you that later if anybody asks me about that one. That was up a lot, came up and got within $3 of the upside target we had at 25.25, and then reversed today. And that to me looks like a top that we might be having, well, temporarily. That is all been so in line with our analysis. And take a look if you haven't followed our bond analysis and interest rate analysis on how well that all lined up, and maybe stronger. Stock market, well, midweek, the Fed came out and their statement, I would call it neutral to dovish. And they pretty much got neutral. We're looking in both directions. We're looking at both sides of our mandate and all of that. Double talk, Seinfeld would say, yada, yada, yada. And then really what it was they did give a little leaning to the side that they were ready to cut in September if everything lined up properly. And the interest rate market decided to price in now about 50 basis point as a possibility in September. They're pricing in rate cuts September and two more. I think it's September, November, December. I think there's 3 more meetings. And then a number of rate cuts out into next year. I don't think the Fed will cut 50 basis points unless the stock market is in a total free fall. I think we'll see 2 or 3 25% base cuts this year. Wednesday, we saw a huge rebound in the stock market as NVIDIA got some upgrades, and the stock market ticked up sharply on that. But then we saw Thursday and Friday a big reversal. NVIDIA it's been an amazing trader. We all know it traded up near 140, and then it fell all the way down to in an overnight session on some bad news in the markets down near 100. Have rallied all the way back up to 120 and then back down to 101 and now trading about 108. So it's been just a wild ride in NVIDIA, and some of the best trading in a stock like that, well, maybe that I've ever seen. So if you don't trade NVIDIA, take a peek at it. I think it's a great trader now, and real good depth in the option market also. So we had that big wild swing, and well, the stock market followed that pretty closely. Also hurting the market were other weak earnings and guidance from a lot of these other mega caps and big techs. Intel, which has been plotting its turnaround, really did a 360 as it found out that the turnaround is just not happening. Down about 27% on the day. I saw at the worst level today as the stock gets absolutely annihilated. That's not good for the semiconductors overall, as that turnaround is not happening. Amazon, poor guidance overall, and I think there's a major top in Amazon right now, and there are major tops in a lot of these mega caps that we see right now, and that's going to be meaningful for when the stock market has a rebound. Then it will have a rebound coming up, and we'll talk about that. And I know that I discussed with RV, and we're going to be planning for our members a video where we look at that sector and where we might have some good opportunities coming after it has a rebound. So Friday's unemployment numbers, they were really weak. Payrolls missed by quite a bit. Unemployment rate jumped to 4.3%. And as you would expect, the bond market rallied in a big way when that happened. But most people would have said, wow, that means the market, they're going to cut rates and stocks should rally. Well, the opposite happened. As bonds rallied, stock market got sold, and it's very clear that the investors are afraid of a sharp slowdown in the economy now, that more of these earnings disappointments will be coming. and they're not excited about buying stocks under these conditions, and money clearly moved from the stock market into the bond market. The big influence might have been today, as the market was weak right from the beginning, was literally a 6% crash in the Japanese market as they're starting to raise their rates. And I've got a lot more to say about Japan as we go forward in this show. There's a very, very significant negative influence right now on assets based on what's going on in Japan. You're not going to want to miss that. Our members have seen me bring this information to them already. So if you're a non-member, you're going to catch up and you're going to think what I have to show is really important regarding Japan. So for traders and investors, I really think that you got to pay a lot of attention to what I'm going to show you, because the action in the yen or the US dollar versus the yen could be very important and very helpful to you moving forward in how you engage in the market. The market overall has followed our analysis pretty perfectly. I think this dip right now that we're having in the market is further to the downside than I had expected. I thought it would be more like about 5% at the most, and it's more like in the 7%, 8% range, depending on what you're looking at. And that is meaningful. And the market's going to make a little bottom in here that I think is going to be important, and there's a rebound ahead. And that rebound, our work said that it would decline probably into the first week of August, and here we are in the first week of August. I'm not saying that the low is today. I'm saying that the low is probably in the next few days, and that we are entering into what we consider to be a bottoming process right now for the stock market as we get into the timing zone for that to happen, though we don't have anything yet that really says that is happening. But when that rebound does come, I don't think it can hold. And you're going to hear a lot about that from the whole team moving forward, because for the stock market, the dangers are mounting. Stocks, well, for the week, we see the S&P 500. I can't keep track of it right now, maybe down about 2.5%, NASDAQ down 4%. The Russell was to the upside and reversed in a monstrous way, down 7-8% right now on the week, as everybody got caught leaning in those small caps because everybody saw that there was a rotation out of big cap into small cap. But then when a liquidation comes in, they sell everything. Bonds, they soar, yields collapsed. 30 years up about 4.5 points on the week. 10-year yields plunged 35 basis points. We thought they were going down to about 3.8 in coming weeks. They got down there. They fell from 4.2 last week to 3.8 this week. They're about 3.85 right now. We might see a lot of bouncing around in there right now, but we'll have probably projecting even lower numbers for interest rates going forward. Gold was earlier in the day up about 70 on the week. It's now up about $35. Silver was up 70 cents, and it's now only up about 20 cents on the week. So a lot of volatility in there. I've said many times that when the stock market goes into a liquidation phase, they sell everything. I've said it 3 times already in this show, and I've seen in the past when the stock market gets very weak, money first goes into precious metals, and then all of a sudden those get sold because they need the cash. The copper market is just terrible. While the other metals were up on the week, this one was unchanged to down on the week, and that is what they call Dr. Copper. And there is certainly a belief now that's increasing that the economy will be slowing down very significantly. And the dollar down about 1% on the week. That's huge. And the dollar's in big trouble. We have been negative in there. And there's a bounce coming probably, but the bounce is a lie. But when that bounce comes, it's probably going to bring a bounce in the stock market. And I'm going to show you more about that coming up. Oil down about 240 on the week. And that is despite a Middle East crisis really out there, with Iran threatening Israel. And the U.S. saying they will defend Israel. So with all of that going on out there, and Iran always threatens to shut down the Straits of Hormuz, which is choking off oil, but still oil is weak. And that's all about worldwide slowdown, China slowing down in a very significant way, and what that may mean for our economy. Same thing for Japan. Japan's 6% drop today is the biggest single day to the downside since the pandemic. That is 4 years ago. That is me wrapping up my commentary for the week. I hope that was interesting to you. And now we're going to move forward in this show. This is trade planning with the askSlim team, from the analysis to the trade idea. We have all looked at a multitude of charts, and this was a very interesting week because the moves were so big that some of the things that we had decided that we wanted to bring to you either changed in a significant way that we needed to change it, or held up and said, wow, I really want to stay with this idea. And in the case of the one I'm going to show you, I almost changed my mind on it, but there's so much activity in NVIDIA that I just think that there's short-term opportunities coming more than once. So I'm going to bring you NVIDIA first, and then the rest of the team will step up and bring you their trade ideas also. And you can see the list of them right here. All right, so this is the chart of NVIDIA. Now, NVIDIA popped up here to the 140 level, as you can see, and then came down here to nearly 100. Now, this number right over here near 100 is a retracement level from this low to this high that is halfway. That's 50%. That's normally a good thing. But when momentum turns down early in the cycle, as you see here, now for those of you that are brand new, these are cycle brackets. This is not the actual cycle of the market. This is just a drawing tool that is a guide to us for the timing. On the right here is the daily, and I'm going to blow this up so you can see and go a little bit further out how these cycles align. This line right over here was an original cycle alignment, and then it shifted out to be a little bit longer, and you can see in here how this now aligns. So what we're looking at now is that this really looks like a major peak. You had a decline right over here off of this high, an attempted rally, and then it failed back down, got below that low. All of that is topping action. And for those people that are members that are using our reversal scout, you really know the value of that in projecting out. I see some people raising their hand right now when I'm saying that. So this really looks like an important top. And I want you to see that this goes out way out over here into November. So that says to me that rallies during this time frame over here are going to be fake, and that they're likely to keep failing. And the projection down over here is down to about $89 here out sometime in November. There's going to be a lot of trade in both directions before that happens. Right now, you can see that actually with the stock market significantly lower, all day long, there was a lot of buying that came in right around this 101 level. Intraday, it was down there. And now the stock is coming back to the upside. These are the resistance zones. Now, you will note that there's a resistance zone right here, these minor ones, that are taken from this peak to this trough right over here, that high to that low. So that puts resistances, the lowest one over here on 108, which had bounced up too easily today, I would assume is going to be able to bounce and get even higher. Now, this rally right over here, that actually could still exist in this cycle, and this could be the cycle low. But the resistance is right over here. I'm going to call this 112, and the bottom of this over here about 114.5. This rebound got up here to 120. I don't think that's going to be able to happen again. I like the sell zone right up over here for short-term trades between this 112.5 and 114.5, 115 right there. And I would not be surprised to see it there in the next week or two where it can get up back to that level. So while I believe that the highest probability is the short side, this is really going to probably offer two-sided trading in there because it's got this good support here near 100. It's got this big resistance, 112.5 to about 115. And that's where I think it's going to trade between, with the highest probability on the short side. So I like the short-term, short side trades setting up. And you can see in here, momentum negative right over here, momentum negative right here. This is the slim ribbon. This is the slim ribbon PO, a proprietary level 4 indicator. And you could see that red arrow that said that it has a downward momentum resumption. And that came right over here. So that actually worked out fine. And I just think it's going to be choppy in this area. I really like the idea of setting up short side trades between that 112.5 and 115 area, because I don't think that it's going to be able to get there other than in quick spikes to the upside that I think are going to fail. So that's my presentation in NVIDIA. And you can see that this decline right over here comes out to September. The next cycle out there comes out to early October. So there are going to be a number of cycles out over here that will give you rallies and sell-offs that all exist within this white area right here. And I think this is going to be a monster trader. So keep your eye on that. And when you see it having a strong day, if you're a short seller, well, you wait. If you see it having getting up to those resistances, well, that's support and levels, you can act. All right, I'm going to turn this over to Katie as she looks at Verizon.
All right, let me share my screen. Can you see Verizon?
Not yet.
Let me try it again.
Okay. No. Nope, can't see it. Maybe we should skip over to RV and then we'll come back to you.
Okay.
All right, yeah, let's go ahead and take a look at short-term long and MCD. Unfortunately, this guy got a solid pop higher off of this flight to safety. This is obviously a safer, lower beta type of name, but let's go ahead and share our screen. Let's hope this works. Should see MCD.
No.
No.
I can see it.
You can?
Yeah.
Well, it says I'm still sharing, so.
Oh, one of the panelists just said that he could see my screen as well.
Well,
okay.
It's obviously my problem.
Okay.
All right, let's go
I'm
ahead
not
and
seeing it either, Slim. So it's some interesting technology Zoom
well,
glitch
should
going
be
on.
a short Zoom. That's for sure. So, what we're seeing anyway, I assume some of you can see this hopefully, but there's a trough that is due here on the intermediate term, 624 to 819. Very nice move off the bottom here. We're already right up towards that 61.8 at 277.64. We do have a lower low versus that old trough, but we are looking for a move through the 61.8 given how early we are in this new rising mode. Reasonable to see that 78.6 at 286.79 on a move through the 61.8. If we shift over to the daily time frame, you're seeing a really nice now higher low and higher high cycle that is forming with a trough that is due 8.8 to 8.21. Watching for, again, a pullback into this rising 8.13 and 21 EMAs here to then set up a long side opportunity for a move to higher highs versus this old cycle high right here at 276.74. On the downside, we have levels from 264.54 to 261.06. That's approximately where I'm looking for this to hold. If it loses on a daily basis the 61.8 at 257.58, that would render this idea not valid. So you can see that the overall risk would be right around 660-ish, and we're targeting a move of around 1250 plus on the upside. All right, so that's the look there at the long idea in MCD. And I'm going to hand this off to you, Matt.
Some of the panelists
Katie.
are saying that Slim should stop sharing his screen.
Well, RV, yours appeared at the end there, so I'm not sure what changed.
Okay.
Okay, let me try
Katie,
to do
why don't
it
you go
now.
ahead and...
Yeah,
Okay,
I'm going to
Katie,
try
sure.
now.
Sure.
Yep, can see yours,
Okay,
Katie.
awesome. All right. So we're looking at the weekly chart of Verizon. The ticker symbol is VZ, and I have this chart zoomed out so that you can see these very consistent cycles. The dominant cycle is 45 bars in length, and they are further divided into minor third cycles. These vertical dotted lines show how the dominant cycle lows align with the ideal cycles, and then these blue vertical dashed lines over here on the right show a period of time of plus and minus a few weeks around the ideal cycle trough when we're expecting the intermediate cycle low to form and for Verizon to move up into the rising phase of the next cycle. So we're currently right in that time period, and Verizon may have formed its intermediate low last week, having almost tagged the top of that support zone after all of these months of just sideways consolidation. Momentum on our weekly charts is shown with the reversal scout. That's this green and purple ribbon running through the chart. And notice how it turns green after each of these intermediate cycle lows form. That helps us to confirm the intermediate low. So currently our reversal scout, if I zoom in a little bit, is still negative. And we would like to see that turn positive in order to help us confirm that this is indeed the intermediate low. Another thing to notice is that this cycle is a base that is formed. A basing cycle is a positively configured cycle that forms after one or more negatively configured cycles. So if you notice, these three cycles here were all negatively configured, ending lower than where they began. This one's positively configured, ending higher than where it began. So that, along with this period of sideways consolidation, shows some good upside potential should Verizon be able to break out above these prior cycle peak areas. I do have some initial targets set here, starting with a 50% extension at 45.34. The 61.8 is up here at 46.91, could get even higher. Let's switch over now to the daily chart. Here we have cycles that average 28 bars in length, and this right here is that long period of sideways consolidation that we saw over on the weekly chart. This right here is the low that may correspond to the intermediate low on the weekly chart. So in this current daily cycle as of today, Verizon traded just up above that 78.6% fib, which actually was our initial target. Momentum is still negative on both the reversal scout and the slim ribbon, so we'd like to see that improve. Actually, earlier today, the reversal scout had turned green and the slim ribbon had improved to neutral. With this pullback now, those improvements have disappeared. Momentum on the 2-hour chart is still positive for the time being. So the setup that we're looking for is a pullback to give us an entry. We're getting that now, and we want to see this support zone in the green bars. We want to see that hold. Those levels are 40.70 on the top to 39.94 on the bottom. So our entry signal could be a return to positive momentum on the 2-hour chart if that turns negative, or if it doesn't, a momentum continuation to the upside signal on the 2-hour slim ribbon PO. Then we would be targeting this area of the prior cycle peaks from about $42 to $43. We do have this daily cycle timing window coming up between August 22nd and August 30th. I recorded an options trade idea video yesterday for this setup in Verizon. If you would like to see that, please do consider becoming an askSlim level 3 or 4 member. And I will turn it over to Matt.
Okay, great job, Katie.
Thanks.
All right, hopefully you can see my screen with FXI. Okay, so in my trade planning segment, I'm going to review FXI, the iShares Large Cap China ETF. It is a look at the daily and weekly charts here with a focus on the intermediate time frame. And like we always do, we want to be focused on the core trade planning questions. So we want to use our technical evidence that is generated by our methodology to be able to determine, number one, a directional bias. But even before you do that, it's critically important to have a sense of what your outlook period is and really be set on what that is, because your outlook period is going to drive the rest of your analysis. And in particular, those key levels and reevaluations. So again, you want to start with that outlook period, then you move into your directional bias. So let's look at why I'm looking at here a negative overall directional bias. So I'm going to start on the left side here, which is the weekly chart. And FXI really in the last cycle, it was a very, very powerful upside move. For the most part, it was a right-hand translation, but once it peaked, it sold off really hard. And you can see here that it has continued that sell-off for several weeks now, actually a few months. And there's been some technical occurrences that have been very negative here over the last few weeks. I'm going to point those out. First is that when we came into the cycle low timing window, it did make a low and then it had an attempted rally. That attempted rally failed, and the subsequent decline here has taken out that cycle low support. So that's a cycle low breakdown. And if this could be a very early left-hand translation, which would be overall very negative to this intermediate cycle, given that there are still several months to go. Even if this is a late low forming, the overall pattern structure currently with this breakdown is negative, and you also have the negative momentum in the reversal scout. If we move over to the daily chart to zoom in on the price action a little closer, you can see here that we had a rally attempt in the rising phase of the daily cycle, and then as we peaked, we have now taken out the cycle low support. So we've had a breakdown on the daily chart, which coincided with the breakdown on the weekly chart. Both of these patterns now are overall negative. We have momentum that is negative in both time frames as well. So the patterns and the momentum suggest that rallies are likely to struggle and the risks are to the downside, and the patterns are calling for a downside projection in the intermediate time frame to test that 61.8 and then even get a little deeper. So I have a projection zone here of 2420 to 2355 over the next several weeks. The reevaluation level would be a close back above, a weekly close back above the 61.8, which is near 2662. So that's what you'd want to watch for, because that would neutralize this negative pattern and require reevaluation of those downside targets. If it was to break above the 78.6, that would negate the negative bias and actually would force me to look at a positive potential situation that could be developing. And that's why the great thing about the askSlim methodology is it allows us to be agile. We do not have a personal bias. We go with the flow, the money flow patterns, and we let the charts do the talking. And there would be no problem shifting gears and preparing for an upside opportunity if that's what presented itself. However, at this time, the conditions are overall more negative than positive. That's what we have right now in FXI. All right, just give me 1 second here to see if we can get Slim back into the show. Slim, are you able to access? There we go.
Hear me and see me?
Hear you and see you.
Okay, so why don't you just for a moment stop sharing and I'll be able to share.
Okay.
We have a little glitch going on right now.
So I stop sharing.
Okay, there you are. And am I back?
Looks like you're back.
Okay, well, that's what we'll have to do is unshare if I'm going to come back on, because we have this little glitch going on. So we'll have to solve that for the future show. All right, so I'm going to let you take this back. This is Matt's section where he reviews the services, and he's going to show you this amazing free test drive on the day trader and MCM. Matt, you could take it back.
All right, excellent. Okay, you should see my screen, the homepage of askSlim.
Gotcha.
All right. So as Slim mentioned, we have some exciting news to share. I'll get to that in just a second. But for those of you that are brand new to askSlim, we offer technical analysis services, innovative trade planning tools, and then comprehensive education for various trading styles, including a separate service to support day traders. And if you wanted to learn more about those, you could go over to our Become a Member area, and that will take you to a lot of information regarding the services that we offer. There's 4 premium membership levels, and essentially how it works is the broader, the higher you go in the membership level, the broader and more extensive the technical analysis coverage is in terms of the markets, the ETFs, and the futures, as well as additional trade planning tools that we offer. So if you're an active trader, very active trader, and you really want to take a deep dive and get access to everything that we offer, then you'd want to move further up the membership levels. If you're someone who is, just wanted to keep a small pulse on the market, you're a fan of technical analysis, then level 1 be very suitable. If you want to dig deeper into our methodology, then level 2 will really get you into that level of access in terms of being able to see and hear more about how we go about the methodology as you're hearing today, and then as you move into levels 3 and 4, it's really about getting the tools to apply what we do on a regular basis, and then get full access to the charts that we share with our members, and that would be in level 4. And then we have our day trader service. But the special announcement today is that moving forward, we're going to be doing some new types of promotions, and those are going to be what we're calling our test drives. So askSlim test drives. And this new period here, we're going to be doing a test drive on, as Slim mentioned, our MCM Pro and our day trader service. We had completed a premium services preview about 2-3 weeks ago, but during that preview, there were some tools that we did not share at that time, and we wanted to be able to come back around and give you an opportunity to test those out. And those have actually recently been featured on the CBOE in an article. If you didn't catch that, in the CBOE July issue of their Innovation Spotlight, they featured askSlim, and we were covered here a story about how Slim going from the trading floor to a leading online technical analysis and trading education innovator. So the 2 tools that they featured were our day trader service and then the MCM. So how this will work is that to get access to this test drive period, you're going to want to click on test drive our tools for free. For those of you that are a free member all the way to level 4 and you currently do not have the day trader, or if you're level free through 2 and don't have the MCM, you're going to want to sign up for this, because that's how you'll get access to these tools. We'll be sending out an email as well, but right on the homepage, and I'll go back to it again, you'll see right up on the top, there's test drive our tools for free. So you're going to want to click on that, and that'll take you into the sign up form page, fill out the form, and then access will begin on Monday. And again, the 2 services that will be available as part of the test drive period is the day trader service, and this will be the impulse monitor. So that was not available in the PSP. That does not require TOS. It does not require Zoom. And I'll pull it up here in just a second. As long as you have your askSlim account and internet, you will have access to the impulse monitor. And then you're going to have access to the day trader live cockpit via Zoom. And then the cockpit market replay system. So this is a new piece of technology that we've created, which is really fantastic for doing your strategy review. I'll pull that up here in a second. And then you're going to get access to our resource and training video area. So that will be for the day trader service. And then the MCM Pro, which was not available at all during the premium services preview, you're going to get full access to the MCM Pro. So the application itself, which I'll show you in a second. And then also we released a desktop app that is for notifications and alerts. So in these very volatile times, conditions change extremely fast. And literally you could get up from your desk for a half hour to an hour, and before you know it, not only is the intraday condition changing, but the near-term conditions are changing. And once those near-term conditions change, those can set off a lot of either buying or selling. And in this case here, over the last few days, it had been a lot of selling that was triggered. So if you have what we call our market conditions monitor, which is tracking these conditions on your behalf, you have the ability now to set alerts and be notified with a feed that we have through our desktop app that would let you know of these changes. So very important to have that, and you can have that feed pulled right up on maybe one of your monitors if you have a multi-monitor setup, also on the desktop. This comes through, those alerts will come through on the desktop. I have mine on Do Not Disturb at the moment for the presentation, but you can turn that on and you'll get a little beep sound, and then it would let you know that there was an alert coming from the MCM Pro. Okay, so again, you're going to want to come here. It's completely free. There's no credit card required. It is likely to be 2 weeks long. You'll have access to this kicking off either next Monday or Tuesday. I will go live and I will give a full review of both of these, a Q&A review. And we've done this before, but I'll probably focus more on the MCM early next week. And because I just did a very thorough review of the day trader a couple weeks ago, which you'll have access to. And then I'll come back behind that as you've had a chance to review the day trader and the MCM, and we'll do another live Q&A session and review. So there'll be a lot of educational opportunity, and you're really going to have a good amount of time to get to know these products and see how they can fit into your trade planning process. All right, so let's just do a very quick review of some of the services, or the services that will be included in here. So I'm going to pull up, here's the day trader service. So the impulse monitor is will be available where it wasn't in the premium services preview the last time. And the reason this is important, again, is because it doesn't require any other kind of software. So it can be a very quick go-to to get a sense of what the dominant intraday condition is in the market. So we've created an algorithm that is tracking the price action, and it is determining an overall impulse directional bias. So this is for intraday swing traders, those of you who are looking for the larger swings. And really what it's going to do is, and almost most importantly, is keep you out of trouble. And that means that you're going to have a good sense of when things are very positive and when things are very negative. And if I pull up, which I'll do in a second here, you'll see that yesterday was definitely a day where the impulse monitor is going to keep you on the right side for a very long ride, is what we like to say. And that's the goal of this service, is to have you not trade against the larger directional conditions, and also give you an opportunity to stay with those larger directional conditions, giving you a larger win-loss ratio there in terms of profit loss. All right, so inside of the impulse monitor, there's over 20 symbols now. So there's an indexes view with just the 4 indexes, and then there is the all, which features 20 symbols, and you can sort by the impulse condition. So you can see which ones are very quickly outperforming others. And now this is not meant to be used as a buy-sell signal system. This is an intraday swing methodology that we've developed. And what you're going to want to do is have your own set of charts that you can use as a cross-reference for the intraday condition that we're showing here, and that will help you with your buy-sell decisions. I'm going to step through that again in the live event, and as we've done this, Slim and I have put together several hours of video training around this overall methodology, and we've added some new nuance to it to help understand all the various signals and indicators that we have available through the system. So this is the impulse monitor. It's focused on the larger swings in the market on the intraday side. I'm going to go back over here. Okay, this is important. This is the replay system. So this is really cool technology that's available to you, that will be available during this free trial. And what you can do is you can click on a date to the left side here. So let's just click on yesterday. And then you can, as you fast forward in time here, and then you can rewind, so you can go forward and reverse, and you can see how this is our day trader cockpit. So this is live throughout the market session, and you can see how the market is responding to all of our various tools and indicators that we have within the day trader cockpit. And you can see as the market started to sell off here, the turbo turns on, and the negative conditions. So IWM and the diamonds were the weakest The SPY and the Qs gave us a head fake pop in the first 30 minutes, but then you'll start to see the warnings coming in. I'm going to point that out here. And what we have two reversal scout indicators. We have our fast indicator and our slow. So when you're looking for, and that's why we call it the reversal scout, because it's out there ahead. It's more sensitive, but not too sensitive. And it's looking for those key swings, either on the upside or the downside. So you can see here that it turned over in that first half hour. And then we have what we call over here, this is our signal line, which was just going neutral. And if I fast forward another 5 minutes in time, you can see those roll over. Okay, so you have the signal line went negative, and then you had the reversal scout fast was negative. IWM and diamonds were already negative and falling off the screen as fast as I could put the new levels up. It was happening very fast yesterday. And that's what's important, though, is that our system is going to give you that heads up that conditions, overall conditions are negative for that more dominant intraday swing. And you can see, again, IWM negative there. And if I just going to fast forward a little bit more here in time so you can see how that plays out. And the reason I'm showing you this again, because the SPY, let's just look at the SPY, 9:30 a.m. It went right here, Central Time, it went negative, and it kept you all the way through about, an hour and a half. That's why we call it a intraday swing system. This is not about trying to scalp seconds or a few minutes. This is going to keep you in opportunities that last anywhere from 15 to 30 minutes to, on the longer side, maybe an hour, hour and a half. I've seen some of them even up to 2 hours. So that's how this system is designed to assist your trading, keep you out of trouble, keep you on the right side for a longer ride. And there is some really good nuance indicators in here to help with those even tighter time frames here to alert you when things are changing quickly. So we have both the more longer intraday swing concept, and then we have more of a fast intraday swing concept that's catching those price movements. Okay, I'm going to move over. That's the day trader service. Now we're going to look at the market conditions monitor very quickly. So there's two views in the market conditions monitor. And again, this is updating in real time throughout the market session. So this is in the background, there's live data coming from the CBOE and bar charts that is getting filtered through our algorithms. Okay, so we have a trade setup condition here, and we have 4 trader types: intraday, near term, short term, intermediate. And we've taken our 2 most dependable momentum indicators, reversal scout and slim ribbon, and we've set them up so that we can have an output, which we call trade setup condition, based on multiple time frames. And again, this is all live that this is happening. And you can click on the trade setup condition, and you can see the ones that are registering as either most bullish or most bearish, and there's a timestamp on there. And the timestamp's going to be consistent with your own computer time, and it's updating as the market happens. So it's an extraordinarily powerful tool to have as you're seeing things change in the market. You can quickly go to the MCM and you can see what is outperforming the market, what is lagging the market, or if you needed to add long side, or if you needed to add some short side, you can do that by looking at the MCM and get a good sense of, from a momentum perspective, what's strong and what's weak. And so it's extremely helpful that way. Again, you have 4 different time frames that you can look at. And as I mentioned earlier, the ability to set alerts on changing conditions is very important. And you can do that simply by clicking on the notify button, and then you can select the type of change of condition that you're looking for. Once you do that, and you have to download the MCM app. It's very easy to do. It takes just probably a couple minutes, and we have instructions on how to do that. This is what the app looks like. And then there's a messages feed that pops up with the newest message up on top. These will be custom to the condition alerts that you're setting. So this isn't a broad notification system. This is custom to your interest, and you will have up to 50 subscriptions that you can set, and you can change those as you go. So again, we will have tutorials on how to download it and how to utilize the system, and I'll be going live on Monday to go through all of this again. Again, to sign up, you just go to askSlim homepage, click on the test drive tools button, and then you fill out the form below. All right, Slim, back to you.
Okay, stop sharing your screen, please.
Yep.
All right, exciting that we're gonna let the whole world get to test drive those two great applications that we have, and I know they're gonna just be astounded at the quality of what they can get on that. So great work on that. We're gonna switch over now to our Q&A, and I can't see the questions because we have a little glitch going on here. So I'm gonna let Arvi drive it. Arvi, is there anything there for me on the future side?
Yeah, let's take a look. There was a question on Bitcoin, on the overall market, of course, which I know you'll cover.
Yeah.
TLT, IWM, and the VIX.
Bitcoin, TLT, IWM.
Yep. And that's.
And
I also see, one other one that's MYM/MYM. I'm not familiar with what that
It's
is.
the Dow. It's the Dow.
MYM. Oh,
YM
micro
and the
DAOs.
micros. Yeah.
I see. Micro
Oh,
DAOs.
that's the that's the Dow micro. So I don't have updated analysis on the Dow. I'm going to show the analysis on the stock market as we get into the end of the show. So we'll take a look at Bitcoin TLT, and then I'll turn that over back to you.
Sounds good.
Okay. All right, I had the NVIDIA chart up, but we're going to switch this over to /BTC. BTC has been interesting to me because the original analysis that we had was that there would likely be a decline in line with a monthly pattern that would bring it down to a best level of 52,000 and maybe lower than that into the sub 50,000 area. Now, what happened was that we got this early low right over here, which was very short. You could see I have that message right there. And that happened as Trump picked Vance, and they came out as a very pro-crypto ticket, and then the market rallied. Now, it's a little bit confusing to me because after breaking down below this low and then rallying past the 78.6%, that would normally mean that the market was in pretty good shape. But I have to question whether this was some kind of an anomalous uptick. And when Trump came out and he said that, they were going to start a Bitcoin strategic reserve, I thought it was extremely absurd. Because Bitcoin has crypto overall a very small market cap, and he's just talking about using the confiscated Bitcoin to be able to do that, and it just having that as a reserve is just makes no sense whatsoever, and that's why I think that this moved down after that news. Now the question is, will this come down one more time and satisfy the monthly? And that would be sub 53.5, where it got to right here. Now, again, we thought it would come down over here. We said down to 52,000, and it got to 53.5. So it got close, but this rally in here just didn't make a lot of sense to me. And to me, the jury is still out. Is it going to have one more time where it gets slammed in here and complete both this weekly and the monthly pattern? When I switch over to the daily right over here, you can see it's the same question in my mind. There is a shift. When you see this dotted line, we're looking at a change of energetics that's potentially in there. And let me just look right over here. So the question is, was this that low right over there where we had projected it to get down right there? Or is the low still coming? And this is where we had the buy pending area. Can this fall over this next week or week and a half and satisfy everything by getting down underneath this low? Well, it's possible. No matter where it gets to, and this is where the support, I'm going to think in the next week or week and a half, it's going to be a long side trade setting up. We enter into a bottoming process right in here. I just don't have a good handle right now based on this upside move and the change in momentum. So this momentum in here went from negative to positive to neutral right now. You can see it's not giving away anything. and you can see this upward turn in momentum over here on the weekly. So I cannot give you any brilliant analysis on this other than the fact there's a potential for it to fall hard over the next week and a half. And no matter where it falls into right over here, it's likely to be setting up a buy pending on that. So that's a look at Bitcoin. And I wish I could give you something that was much more tantalizing, but we just have to wait a little while. And that's what does happen sometimes. Here's your TLT market right over here. So we had believed, and this, you could see this analysis is not updated, that we were going to get upside movement in here. And this was the resistance up to the 78.6% retracement from this peak right there. This is such a bullish pattern right now. And we were positive on there. And this weekly chart, essentially what this says is that these supports need to be up higher than where they are right now. There's a time frame in here where this is likely to get a pullback. And I'm going to show you my stock market analysis that says we're likely to get a rally in the stock market or a rebound coming up into September. That makes sense for this pullback into September as the panic subsides temporarily. But then this period in here, September, October, November, is where we could see another upside panic to the upside into the bond market. And I think that will relate to a very risky period for the stock market. So that's the weekly pattern. The daily pattern, you can see again, jumping above the expectation that we had right in here. Again, I'll be raising these supports in here and where we think it's going to pull back to. And then after that, we would expect once this trough is in place right over here, then it will be entering into that next upward movement right there, and probably be jockeying around between that 94 and 98 area for several weeks in September before it then begins to move up again. I could easily see it getting up past that 100 level when we get out into this September, October, November period, as the stock market weakens, and yes, weaker than I think it will be now. And that will be setting up as a stock market gets sold, I think, harder. We're going to see a flight to safety that pushes these numbers in TLT and the Treasury sector higher in a significant way. That is the look at the ones I'm going to share right now, and we'll be looking at the stock market in a little bit. RB, I'm going to turn this over to you.
All right, Slim, thank you so much. Let's go ahead and look at some of the sector ETFs, and I'm going to hand this off to Katie to look at the individual stocks. So I'm going to share my screen, Slim, right now. I think you have to unshare yours, right? Is that
okay? Do I?
I think so, because I think it only allows us to share one screen at a time.
Okay, there you go.
There you go. All right. So let's,
Gotcha.
yeah, I'm not sure. This is a new thing for them. We'll pull up the SMH first, since that's been on really everyone's mind of late. Let's pull this up. So you'll see on the weekly a clear now cycle peak that is in place on the intermediate term. We have now curled our way down and are looking at the 78.6 at 216.13. Very likely to move down towards 198 at least on the downside. We have a trough that's due 9:30 to 11:18. So rallies here are very likely to be false and are poised for a move back down. Jump over to the daily chart. Okay, so this was where it tried to form its low, couldn't, and is obviously now getting hit. There is, however, still a low due, 731 to right on 89. We would look for a bounce, but highest odds are that that would form a lower high and then curl its way back down, given what's going on here on the intermediate term pattern, which is a clear now peak that is in place. If we jump over to the XLK, I know I saw that one there. Let's jump over to the XLK on the intermediate term. Also now very likely peaked, and you can see we are also looking at the 78.6 on the downside at 202.30-ish. If we were to see a rally, which is likely, we would look for that to also fail and work down, I would say back over to this old low here at 192.04. This trough is also due, you can see, towards the later part of the fall of this year. So not a good pattern here at all at this point in the XLK. If we jump over to the daily, you can see that there's also a trough that is due in the XLK right around now, 729 to 86. Highest odds are here as well. We would see a rally up, likely I would say towards this zone, 215 quarter to 223.75 or so. And then we'll be watching to see if it fails there. That is what the highest odds are, is that it would fail and then curl its way back down there in the XLK. I don't think I missed anything else. And I'm going to go ahead and hand this off to you, Katie.
Apple.
Oh, yeah. Apple. Sorry about that. Pull up Apple. Apple's actually holding up okay right now. You can see that it is actually up on the day with the overall market down in the NQ about 500 plus. We're seeing Apple still holding its bid up 620. So overall, this is acting fine. We haven't seen any clear peak quite yet. We have a trough that is also due towards the later part of the fall, and you can see we are trading in this zone from 223.5 to 238.75 or so. On the daily chart, this has likely formed a low right there on 725, and we are now turning back up. So if you go ahead and draw in your fibs from cycle high to that trough right there, likely to rally up towards that 61.8 to the 78.6, 228.60 to 232.40. If it goes through the 78.6, we have the old high then in play at 237.23. So always level to level. And I'm going to go ahead and hand this off to you, Katie.
Okay, sounds good. I think you have to stop sharing. Okay. Can you see Lockheed Martin?
Yes, we can.
Okay, great. So this chart is interesting. We had very long period of just basically going nowhere, just sideways, kind of chop until just a couple weeks ago. They had apparently good earnings and had quite a move up through some of these prior cycle peaks. We are getting up to kind of extreme levels, 161.8% extension, 200% extension. It's backing off a little bit from there this week. And we do have a cycle timing window that is coming up. These dates are 9/2 to 10/11. So there's nothing yet that says that the peak is in. We've got very positive momentum here. I would like to point out that we are getting very far from the moving averages down here. This is the disparity index, and I have it set to the 34-week moving average. And when we do get up to these levels, we tend to see a pullback. If we switch over to the daily chart, here's that long period of sideways movement and then the explosive move up off of earnings. We do have a daily cycle timing window that's coming up, 8:15 to 8:23. So I would expect some pullback. I don't know if it's going to be able to get as far down as these supports. These levels are 520.37 on the top to 495.19 on the bottom. And then it may try to make another high, but this cycle right here, you can see the dates 10/14/24. That would be in sync with this window. So this is the cycle where we would expect some weakness to develop and maybe even breakdowns as we form both the short-term and intermediate-term lows. Let's go and look at 3M. 3M is just coming out of weekly cycle timing. These are 32-bar cycles in this industrial sector stock. We have almost reached the 100% extension already, and we do have some supports here. Those are 117.04 on the top to 109.87. If we were able to get down there, then that would set up a good buying opportunity for another move to the upside there. Momentum firmly positive, and we're just beginning this cycle, so there's likely still more upside. This cycle isn't due to end until the end of February. Over on the daily chart, these are 28-bar cycles. Here's that big move up, strong momentum, positive reversal scout, positive slim ribbon. We do have a daily cycle timing window due 8:13 to 8:22. So this I would anticipate, as long as the supports hold, would set up a good buying opportunity out into the fall. Let's see, somebody asked for Tesla. Let's go back to the weekly chart first. Tesla has a dominant 30-bar cycle broken into minor half cycles. So we're in approximately that area where the the first minor cycle be forming its trough. So you could get another move up into this space here. And then we are targeting that 61.8% fib in this timing window for the dominant cycle, which is between 10.7 and 11.15. So out in the later fall. And that level is 189.30. Over on the daily chart, this is a 30-bar cycle, and you can see that it has broken down below the cycle low support there. So we have created this resistance zone using that recent high and today's low. And if we were to be able to rally up into that zone, then that might set up a good selling opportunity for a move back down. These are short-term extension levels. We've already tagged this one at 206.54 today. So the next one's 199.89 in that timing window from 8:30 to 9:10, and that would give us possibly that that minor cycle low over on the weekly chart. Tesla, and I think I also had Disney. Let's go back to the weekly chart and take a overview. This is very negative. We only got a 2-week rally off of that cycle low and just continuing to go down. Similar to Tesla, first of all, we have earnings, and then we have a second minor half cycle that is due to be bottoming. So we may get a move up. We've placed these resistance zones in there using this cycle high and this recent low. If we were to be able to get up into the resistance zone, that would be a good sell zone for a move back down into this timing window, which is 9:30 to 11:08. We're seeing many symbols with similar timing right around the time of the election. We are targeting this area at 81.52. Over on the daily chart, we have 2 out-of-phase cycles here. So this one is 48 bars and this one's 51 bars. You can see how each of those plays out. These cycles are showing the blue one, which we believe to be dominant, but they both do still have an effect. So I would project with earnings, anything can happen, of course, but we are targeting this area of the 50% extension off of the daily chart, 88.33. And then when this cycle, this out-of-phase cycle begins its rising phase, we may get another move up and then back down. And this timing window is in the mid-September timeframe. So the highest probability would be a move down, back up, and then a further decline, especially based off of this situation on the weekly chart. But we do have earnings coming up 8/7, so anything could happen there. Those were my 4 symbols. Let me stop the
Okay,
share.
I'm gonna
Great
take
job.
this back from you. Great work, everybody. And we're going to now switch over to look at this very, very volatile stock market. All right, stock market analysis and projections. This is important information. Make sure you take time to read this slide. It talks about our approach to the market and about how you use our information with that important aspect of trade ownership. You must take ownership of your own trades. This again is what we saw just a little while ago. Matt did a great review of our day trader service and our market condition monitor, the MCM Pro, and you can test drive this now for free. All you have to do is go to askSlim.com, click the test drive button up on the top, and you will then be able to sign up and get this for a couple of weeks for free. You're just not going to believe how great this is. If you have any questions, write to Matt at askSlim.com. All right, stock market analysis, multiple time frame analysis and projections. That's what we do, multiple time frame analysis. We share with you the sum of the evidence when we come up with our projections based on the cycle rhythms, that is the money flows in the market, which we show to you in a visual way, using also our proprietary momentum indicators, and the important support resistance zones. It's important to see how they act through those zones. I'm going to also show you an absolutely crazy important comparison to the US dollar JPY and talk to you about why it is so important right now. We're going to start out by looking at our multiple time frame analysis. There are 4 charts up here, and that is weekly, a daily momentum chart right over here, and a 2-hour chart right there. So we're going to look at the SPY on the weekly. Now, we had talked about the SPY having a correction during this time frame. Now, that came from the cyclical patterns on the bottom, which essentially are money flows. This is how you see them. And there is a repeating average length or period, as they call it, for the cycles. And in this case, there's also a minor cycle in there. And I thought because of the conditions of the market that the minor cycle would have something significant on the downside in it, but not a bear market, but something significant in here. And I had thought that, well, in the crazy bullish case, it would be maybe only 3.5%, 4%. It could get down to 5.5% or more on the downside. And it's gotten to be a little bit more of that in that decline. If you look over here, the minor cycle right there in a bullish cycle, looks, not a lot different than this, but this was a bearish cycle where it broke that low back over here, and that set up a very, very bad situation back there when the market was in a bear market. So right now, we're just looking at this, and I want to remind you to go to the askSlim.com website, go to workshops. There's a free video there, and it talks about our cycle analysis workshop, and you can learn how to do this style of analysis like our expert team. So right over here, you can see these 2 timing lines says this is really where this bottom should come in. Now, I had some reasons to believe it was going to be in the first week of August, and that's more on the daily chart. But I want to look a little bit further out right now. And that is the period right in here, which is a potential for a large drop out over here, and maybe even a bear market that could form in this period of September, October, pre-election or after election right there. There's your election date right there, November 5th of 2024. And I don't need to tell you about the politics that are going on right now and how any of that can't really be very exciting to the stock market and investors. So we may be done here on the downside, or we may get some further decline. The extreme area that is right here on the SPY is 520. This level right over here where it tagged today is about 528. You can see right there. Now, if I switch over to the daily chart, but first, there's something important I want you to know. See this downturn right over there in momentum? That is our reversal scout. That's a level 4 indicator here at askSlim. And that is a pretty important warning that there is weakness here. You can see this cycle right over here where it pointed to the downside for a correction. Look at this one right over here. This was so strong, the reversal scout could not turn down. But now it has turned down, and it tells you about the weakness that's in the market. And you have to be very skeptical of rallies now when they come. Here is the daily right now. And this daily, what we do is we build a slim cloud, is what we call it. And the slim cloud, let me just take it from this spot right over here. You could see that what we do is after the cloud has developed and it's finished, we put in the cycle lines, as you see right over here, and then we begin to build the next cloud. I had put out a warning that if it got under 542, if it really approached it, the market was going to be in trouble. Also, you can see in here, as it was moving up, this is our option bias study. And when it's up here at what we call P3, the market is in very, very good shape. And you could see as it continued to move up, the market was in good shape. This says bias your option positions to the long side. It is now down over here. It says bias your option positions to the short side. That doesn't mean you sell right over here at the bottom. What it does mean is that when rebounds come, they're likely to fail. Now, this low right over here, you see that note early. That made no sense to me. It said to me that if we got a rally, it was likely to fail. Now, this is where that NVIDIA upgrade came and it got up here into the resistance zones. This is pretty anomalous. I mean, it's pretty reasonable to be looking at this level over here as a level that will probably be tested because it was so early, but that a rally would fail. So, we had looked at this and said, well, we may be entering that bottoming process. But still, there was time for this to fail and move down. And it came down over here and tagged this level right over here, which are supports off of the weekly that I just showed you. Let's go back to the weekly. You could see it tagging that support. Let's go back to the daily. Here's where it tags that support. Now we're in a time frame now, and I also have some intraday charts that help me time this also, that says to me there is likely a low going to form in here. So we're just entering into this bottoming process that comes in between these two lines right over here, where we start to look for signs that the market could make a bottom. Now, if the market did give us some signs of that, then I would be looking at projecting it out something like this. As you can see, I wanted to show you that alternative where we start to look for what the next cycle, how that next cycle shape will look as I build the cloud around this. So I wanted you to see that once this bottom is in place, I will have an anchor point. I'll be able to put in the resistance zones right in here that would suggest that the market will have a tough time at that level. Just as it had a tough time right over here, we'll have some resistance zones that say, well, that's probably the area it's going to rebound to, but I can't do that until I know where the low is in here and I have the anchor point. So when you go back to the weekly, you can see that, well, that's projecting to another rally. This is projecting based on the mechanical way that we do it, because this is a positive cycle right over here. And it says that the next half cycle is likely to get up and test this area. My gut tells me that's not going to happen, and that it's going to fail more in the resistance area that we put up here on the daily chart. But that's just my gut feel from 50 years of trading and looking at these, and I trust my gut. So again, the momentum right in here, slim ribbon turning negative right here, the option bias indicator telling you that you should really still be thinking about biasing to the short side. This is the a look at the momentum on the for the chart. No comparisons on that, so we'll move that off. And you can see the momentum in here as it was positive through here, and all of these upside momentum resumption signals coming, telling you the market was in good shape. You see way back over here in February, March, doing the same thing. And right over here, you now get this downside momentum signal that says resumption, expect resumption on the downside, which is what we saw. So a lot of weakness and a lot of reason to be careful about buying for a bottom in here, because we don't really see that we have it yet. Here's our 2-hour chart right in here, and that has the market condition indicator in there, which is a multiple time frame indicator. And when it gets down to this 25 level, it is doing a test. It is now down over here to the 17 level. If it crosses under minus 25, it will be a significantly negative signal. So we're watching for that right now. So again, there is your weekly, which says getting near the bottoming place, that it should be able to put on a bounce. I'm suspicious about what would be the normal rebounding magnitude that we have on there. This is what the projection looks like. Once we get this bottom in here, we'll be establishing where that area is. That is the resistance area. And if it sets up in a positive way right over here, like I have it drawn, and that's the expectation, that will then confirm that low right over there. And we'll be looking for it to continue waffling around over here until we get into that September, mid-late September period, where I think the risks really increase again. For those of you that missed my analysis on the interest rate markets, I show that where interest rate markets get very weak or the bond market gets very strong, those coincide with severe declines in the stock market. And that's one of the things that has me worried moving forward about the period just past here, past September, But once this bottom is in place, we'll be looking for that rebound right in there. So now I want to show you something else, because this is mind-boggling. I talked a lot about the yen and yen carry trade recently with our members. What's going on in the world right now is that for more than a decade, the negative interest rate policy in Japan has been financing the stock market and financing other markets. It financed the Japanese market. It financed the RAI craze as the markets got to an insane level. 200% of GDP is insane. And the market's backing off now from that, as you can see. What happens is that they borrow money at zero in Japan, and they take that money and they spend it elsewhere, and they invest in other assets. But the Japanese yen collapsed. And when that happened, the dollar collapsed versus the Japanese yen spiked. And when that happened, investors, massive amounts of them, had to unwind the yen carry trade. So it's the reverse carry trade. They are short yen, which were moving up sharply, and they were long other things that they had to liquidate. Look at this now. This is a 2-hour chart of the US dollar compared to the S&P 500. And this takes you back over here to May 1st. I wanted to show you at least 3 months in here. As the dollar moved up and the yen was weak, the stock market was able to move up. As you can see going through here, this is the dollar strong, so the yen is weak. Dollar strong, so the yen is weak. Stock market financed by money they were borrowing in Japan. But look what happened after the dollar started to fall versus the yen, or the yen spiking to the upside. All of a sudden, the stock market got sold. Look at how this follows each other. If you're not watching this every single day, intraday, you're not understanding why the market's doing what it's doing. This big decline here in the dollar versus the yen shows you they're massively short in the yen, they're massively long other assets all over the world, and it forces them out of our stock market. This is your S&P 500 right over here as it fell from 5670 all the way down here to 5300. And that is a big problem for the stock market when the US dollar is weak versus the yen. So in other words, you either want to look at US dollar JPY, and when it moves down, the stock market has been moving down, or you want to look at the inverse at the futures of the Japanese yen, which will look just the opposite of this. I like to look at this one because it tracks it perfectly together. This is what's feeding the stock market decline exactly at a time, based on our work, that should be happening. So the question is, what about when this changes and the US dollar starts to rebound? Shouldn't that give you some kind of a rally? Well, let's take a look at that and see if that's the case and how long it should last. So we're going to look at US dollar, USD, JPY. We're going to switch these charts over to that. And now what we're going to do is we're going to look at the weekly, daily, and you can see something in here very significant based on our cycle work. Look at how gorgeous this is. And what happened after this cycle bottomed, of course, the dollar was going up versus the yen, and the stock market rallied to its peak right in here. Once the US dollar started to fall against the yen, all of those carry trade positions had to start to get unwound, and then you see the dollar plunging versus the yen. But if you look at the cycle patterns, this is a breakdown. That says that this cycle has peaked right over here, a left-hand translation, and that the yen is likely to continue moving down into where the monthly trough is, aligned with the weekly trough. That says that rallies here in the dollar versus the yen, or pullbacks in the yen that bring a stock market bounce, is likely to fail, and that we're likely to see waves and waves and waves of decline in the dollar yen, and waves of decline in the stock market as it relates to it. And that is a very, very negative scenario for stocks. That's why I'm pointing in our analysis in the S&P 500 to a potential very large decline out over here, where this aligns with the stock market drop right there. This is a very negative scenario. And you can see in here, you know, this cycle over here, it turned negative, but it didn't break that cycle low with till there was only 3 weeks to go. In this case, it did it with all of this period to go all the way out into November. And this is a very ugly looking chart and very ugly for the stock market and other assets. Let's take a look here at the daily chart. And this is bad. Now, look over here. You see these 2 orange dots? This is our option bias indicator. It says that this is oversold and likely to bounce. Probably going to bring you a stock market bounce when this bounces right in here. But again, this doesn't point to really a low until out here towards the late August period. So the stock market might actually have a problem getting any kind of a real rally going into that period right now. That is a look there, and you can see that the slim ribbon, which was positive all through here, and telling you the US dollar versus the yen was strong. And to keep your positions biased over here on the long side, right over here at option bias indicator, this has now turned negative. Look at the momentum in here as it went from positive to neutral in all these cycles, and then turned negative right over here where the stock market started to decline. Again, we're looking at the dollar versus the yen right over here. And once this turned into negative momentum, it was a lot of trouble for everything. So I wanted to show you that because it is immensely important to you as an investor and as a trader. This period of dollar weakness that we're looking at versus the Japanese yen is early. There's a lot of time for this to continue. All of the rallies in the dollar versus the yen are likely to bring rebounds in the stock market, and they are very, very likely to fail because this is likely to keep moving down. Again, my S&P 500 analysis is that there is likely to be a minor bottom on this weekly cycle that forms in alignment with the bottom forming in here and a period where the market looks a little better, but that in alignment with what I expect to see in the Japanese yen, Japanese yen spiking up and the dollar moving down, takes you out over here into October and this very, very weak period there. We had somebody ask about the VIX earlier on, and I just want you to see this VIX pattern right in here and this immense spike. This is where we were talking about the bottoms in here in these cycles and the possibility for a spike. I didn't really have it, you know, I said on the outside into the 20s, 30 would be a real panic. You could get in this period out over here into this October, November, 40, 50, 60s in the VIX out over there. So likely to get some period in here where the market has a stock market bounce and the VIX pulls down, but then it is very likely to be moving to the upside again. So that is a look at the stock market and the relationship to the US dollar JPY. I think it is just mind-boggling that how that is such important information in those comparisons, and how it warns you that after more than a decade of zero interest rate policy that we had here in the US that changed, then had money being borrowed like crazy out of Japan to finance all of these other bubbly assets in there, that is over with. And that's why you're seeing major tops forming in a lot of these high-tech stocks that were just absolutely wildly priced. If you caught a video a couple of weeks ago, I showed how the Dow had now gotten up to a level that also was historic as far as its value compared to the GDP. Everything that was those flight to safety, everything that was coming out in money-wise out of the tech stocks as this peak was being made, and then moving into small caps, mid caps, Dow, all of those, that also has changed. As valuations got too high for those also. Going forward, we may see a period where the small caps, mid caps start to do better again. Well, of course, we'll be showing those to our members. Hey team, come on back. I am just I'm filled with energy over that analysis.
Oh, that was incredibly insightful.
Yeah, that was awesome.
Right? I mean, that was one heck of an educational experience there. Great work, Slim.
Just
job, Slim.
absolutely
Excellent.
great. I have so much fun sharing it, and I think it's just so important. I'd love to see. So if you have any comments on that analysis, write the team at askSlim.com and they will send it over. If you're new to askSlim, start learning from this amazing team of pros. Go to askSlim.com, look around, take advantage of our free test drives. Click that up on the top of the website, and you will start to really gain on your education and analysis that we share for traders and investors. Team, I had a lot of fun. Did you have any fun?
We had a
It was
blast.
fun.
Great show, guys. Thanks so much.
Great show.
All right,
That's it.
take care,
We'll see you in a couple of weeks.
All right, bye-bye.
Have a good weekend.
Bye-bye.